Welcome back to National Report. Let's get a check on the markets here. It is the day after Super Tuesday, and U.S. stocks opened sharply higher this morning. Again, this was at open. The Dow opened up almost 500 points up. NASDAQ opened a little more than 100 points, and the S&P up almost 50 points. They're even higher now. So joining us to break down the markets, the roller coaster, if you will, of it, is certified financial planner Doug Flynn. Doug, let's jump back into the breaking news, Bloomberg dropping out, and back to a point that you made earlier in the segment. You said that voters here getting the attention of Joe Biden here, winning so many big states, easing the markets here for stability. What did you say? Certainty, right? Does this Bloomberg breaking news dropping out continue that certainty?
I think it consolidates the moderate voting around Biden, which probably was the plan all along, but now it's getting clearer. And they're going to need that because Wall Street was not liking the prospects of a Sanders possibility of running against Trump. That would have been a very clear choice between the two. And there are a lot of clients that I have that have expressed to me clearly that there's no way that they're going to vote for Sanders. Maybe it's because they have some money invested or what have you. So I think consolidating around one moderate person makes it easier for them to have the matchup that we're probably going to have.
Politics obviously playing a role in the markets potentially, as well as the coronavirus, which we've been talking about. Obviously a global outbreak, but we want to focus in on U.S. markets right now. We're seeing they're up, which is a good thing.
Yeah, absolutely. I think people are taking in the fact that, as a percentage, things are falling in line to a more normal previous outbreak kind of a scenario where if you look at previous outbreaks, they sort of take on the same kind of a cycle. But in the middle of all the craziness in the news, there's reaction, and every day things are happening so fast, the market's moving so fast, and it's spreading, and I think that's what's freaking people out. But when you look at it, it is waning. The active cases are way down, and it's sort of settling. Even though it's spreading out a little bit, it's settling. So I think that gives people another reason to say, okay, maybe we're going to get past this, and we can go back to just looking at companies and investing for the long term and not worry about the immediate day-to-day what's going on. That's the way you need to think.
I think it's interesting, too, just to want to clarify this. Coronavirus obviously playing a part in bringing the numbers down on the market, too. President Trump, and Emma, you brought this up earlier, President Trump alluded to the fact that the elections also take a toll on this as well. A lot of people balked at that idea. In fact, Nancy Pelosi came out and condemned that idea of saying that had something to do with it. But we're seeing that there was truth to that, as you said earlier.
Yes, I think that, because the markets like certainty and people want to know what kind of a system are we going to have. And, realistically, it doesn't, Republican, Democrat, normally, traditionally, it hasn't had that much of an impact on the markets and the underlying companies. Apple isn't going to sell less iPhones based on who's in the White House.
Right.
But perhaps Bernie Sanders might have changed the fundamentals of how we do business, and that was the wild card, I think. So as it settles away from that, if that's how it goes, then you get back to, okay, the business of America is business, and that's what we can focus on.
Let me just ask you this really quick, too, back on coronavirus. We're seeing a lot of price gouging in stores, hand sanitizer, masks.
Online, too, yeah.
Online as well. When are we going to see this drop? When are we going to see this stop? Because the market's already responding. What about price gouging?
Yes, I think like any crisis, right, whether there's a hurricane or whatever it is, you find these price gouging kind of things going on. But I think those are short-lived. And at some point, we're all going to have a ton of masks and hand sanitizer, and then this will go away, and I'll have more than I'll ever need for the rest of my life. But finding it at some point is a problem, and if you feel like you need it. But basically, the rules are, as we talk about all the time, whatever you were doing before, just do it twice as long. So, wash your hands and do all those things. But that can have an impact on the markets in the short term as people have canceled travel plans. They do some things that might, in the short run, affect investing and the stocks they own. But we're all going to get back to normal, unless, of course, something completely out of the ordinary happens with this virus. But assuming it doesn't, we'll get right back to the normal long-term way that things go.
Okay, well, looking ahead, maybe a few months in the future, let's talk about U.S. businesses who have work in China. They're using supplies from China to make products. Are we going to see prices increase in a few months when we're dealing with delays?
Yeah, that hasn't actually hit the consumer yet because the way the supply chain works. And so what we do know is that when factories were at about 50 to 60% capacity not too long ago, they're now up to about 70%. And it looks like by the end of this month, they're going to be back online to about 90%. So if that's true, then we're going to end up with a very small hiccup. And probably by the third or fourth quarter of the year, this will hopefully all be behind us and we'll get back to the way normal things go. So I think there's going to be a slight hiccup, but I don't think it's going to be anything really protracted or long. That's the way it seems now.
Always good to have your insight on this ever-changing market. That is Doug Flynn. He is our certified financial planner. Thanks so much for joining us.